On Business Incorporated, Africa Finance Corporation onboards all West African countries as members of Niger joint group as 33rd member. East Africa countries urged to adopt common tariff to protect local trade. And Ghana's oil production set for decline in 2022 after COVID-19 delays. Thank you for joining us. I'm Chimeze Obi Iwag. We'll begin with market numbers from African continent, where major equities traded with positive sentiments at intraday. Nigeria's NGX index rose higher by 0.32%, while South Africa's JSE index inched up 0.19%. Egypt's EGX 30 was also up 0.14% at intraday. Meanwhile, the Nairobi Stock Exchange closed Monday's trading session on a negative note. And in the Middle East, trading activities were mostly positive at intraday as the Abu Dhabi and Dubai indices were up 0.19% and 0.58% each. Elsewhere in the region, Saudi Arabia's index fell 0.39%, while the Qatari index rose by 0.15% at intraday. And European stocks were muted in the morning ahead of a key reading of U.S. inflation data. Aside from this, there are other stories making news in the market, and those are what Chelsea will talk to us about. Hello, Chelsea. Good afternoon. Well, let's start off with our Facebook whistleblower, Francis Hogan, who has been discussing new regulations on the tech giant with European leaders this week. What has come out of those talks?
Well, what we've heard from Frances Haugen, the Facebook whistleblower, is that she's actually a pretty big fan of what the EU has been doing in terms of tech regulation. The EU has been a leader in terms of regulating big tech for the past several years. They've implemented several multi-billion-dollar fines on companies like Alphabet or Amazon. But right now, they are mostly reacting to problems at these companies. Their regulatory powers don't really allow them to be proactive. But they have introduced a new proposal for what's been called the Digital Services Act. This would give them much more sweeping powers to regulate companies like Facebook. They would be able to, for example, put more strict rules about taking down illegal content quickly, or they would force companies like Facebook to share more information with their users about their algorithms. So that could be a game changer for these companies here in Europe. And now that we have seen these details about how harmful Facebook is for its users and how it's ignored the damage it's doing, there's definitely a lot more momentum here in Europe to pass that Digital Services Act. So I think that's something that we could definitely see start to accelerate because of how much pressure there is right now on Facebook.
And German exports fell more than expected in September. That's according to a new data amid supply chain issues. Germany appears to be getting hit harder than other European economies by these problems, isn't it?
It does, and that's in large part due to the sort of structure of the German economy. Germany is extremely export dependent. They depend on sales abroad for about 30% of jobs here in Germany, 30% of economic output. That's significantly higher than a lot of other developed countries. So exports in particular are a major driver for this economy. And for the past 2 months, we've seen them decline. That's a major concern. And a lot of this is due to supply chain issues. Germany is also very focused on, it has an economy that's very focused on manufacturing, industrial production, things like the auto industry. And those factories just can't get enough products right now. So that definitely is starting to really weigh on the German economy. And we're starting to see it fall behind some of its peers. So this year, Germany is expected to grow by about 3%. That's about half the level of a lot of other major European economies like France or Greece.
And talking about the auto industry, we're having the UN climate conference continuing, and automakers are struggling to reach agreement on a proposal for the industry to shift to net zero emissions by 2040. Are German automakers on board?
Well, there's been a lot of anticipation for this net zero proposal on the sidelines of the UN climate conference, but it seems pretty unlikely that they will be able to find agreement on this. It is still expected to be announced tomorrow, but we've heard a lot of pushback from automakers, including here in Germany. So the biggest German automaker and one of the biggest automakers in the world, Volkswagen, says that they won't sign on to this pledge, and they're saying that they aren't doing it because they want to put pressure on China to phase out coal. So they're not saying exactly that they don't believe in the goal, but they're saying they don't want to involve themselves in this pact. We've also heard from BMW, another major German automaker, that they won't sign the pact because they think 2040 is just too aggressive of a timeline, especially for some other markets, like emerging markets, that are less far along in terms of the transition to electric vehicles. The one company that we have seen embrace this proposal is Daimler, the parent company of Mercedes-Benz. They say they will sign the pledge, and they already have been planning to phase out most of their diesel and gasoline engines by the end of this decade. But even so, there's still a lot of holdouts, including countries like the US and China and also Germany. So I think this will not be as sweeping and as ambitious of a proposal from the auto industry as many people had hoped.
All right, thank you very much for updating us on those there, Chelsea. Enjoy the rest of the day. In the meantime, investors are looking ahead to fresh inflation readings in the U.S. in the next few days, with the latest producer price index due today and the consumer price index later expected on Wednesday. Let's see how the UK market is fitting in all of these. Let's bring in Juliana now. Hello, Juliana. Good afternoon. What's in the minds of investors in the UK ahead of the fresh inflation readings in the US?
Good afternoon, Chibi. Well, British investors, investors investing within the square mile, they're in a good mood. The FTSE All-Share is in positive territory. It's up 0.14%. The FTSE 100, that's up by 0.12%. And the FTSE 250 is also up by 0.06% at intraday. In the currencies market, the British pound also flying high against the US dollar by 0.20%, up on the euro by 0.18%, and the British pound is down at intraday on the Japanese yen by 0.13%. As you said, a lot of investors are waiting to see the core producers inflation data, which is out probably about now in America. But it's all about the core inflation, which is due tomorrow. I believe it's running up over 6%. We've already seen that the Fed are ready to start tapering down inflation when they started discounting how much they'll be spending on the quantitative easing program that they have going on there. Even though the markets are in a great state at intraday, I think, of course, inflation is right up the top of investors' mind. We had data this morning showing that UK grocery sales are slipping and that inflation at the checkout is rising higher than it's been for 18 months. And I think the big question is, Jimmy, when is high inflation going to stop consumers spending? And I don't think investors want the answer to that question. They want it resolved now. So yes, again, we'll use that popular phrase in business. We'll just have to wait and see what tomorrow brings us.
Absolutely. Only time will tell. In the meantime, the U.S. Fed has warned of rising risky asset prices. We are seeing Bitcoin and Ethereum prices surge. Are the UK regulators also worried, as much as Fed is, about this?
Absolutely, they are. In fact, some would even say more. The Fed risk report always looks at, what could potentially cause damage to the financial markets, and central bank governors, most central bank governors around the world, believe cryptocurrency is a huge issue, particularly here in the UK. We've heard those stories, haven't we, about the Financial Conduct Authority. In fact, even Chancellor Rishi Sunak has commented on some of the concerns about the significant rises. But of course, because there is very little regulation, you rise high quickly, you can fall very quickly, and it's how to protect consumers from that, and particularly the volatility market. We saw with the meme frenzy over GameStop at the beginning of the year, very volatile. Of course, the stock rose very quickly, but it fell also quite quickly, though, because of all of the salaciousness around that. They did have a couple of bigwigs to come in and take over that brand, but that doesn't happen with every single firm, particularly when it comes to cryptocurrency. I believe the Fed and the Financial Conduct Authority have really spoken about social media and the harmfulness that social media plays. Kim Kardashian, yes, I'm mentioning a Kardashian on your show, Chimmy. She was actually singled out by the FCA chief a couple of months back because she went on social media promoting a crypto coin that nobody had heard of. The regulators didn't know. And that, of course, went to over 200 million people. I think they actually said this was probably the highest advertised cryptocurrency that there's ever been. And it was an unknown coin. So there are concerns. So yes, I would definitely say that the regulators here in the UK completely double down on what the Federal Reserve say, and they continue to think that crypto is very, very risky.
And also today, shares in Primark's parent company, Associated British Foods, had surged over 6% after it announced expansion plans and a special dividend. Can you tell us more?
Yeah, Associated British Foods, as you said, they're the kind of silent parent owner of a very popular brand, Primark. They've had an exceptional year, and in their trading report earlier this morning, they've assured investors that even in this current fiscal year, they're also expecting great returns. But, and there's a big but, and I think that but is what we're seeing within the trading updates from any retailer here in the UK. Shortages and labour shortages are still a topic of major concern. Primark, their flagship brand, hasn't been doing so well. They lost over £2 billion in sales during the pandemic. Of course, they lose out from not having an online presence, whereas we saw the likes of Pretty Little Thing, Boohoo, JD Sports, the sports fashion retailer, doing exceptionally well. However, they do expect things to pick up. They are planning major expansions, especially into the US market. US consumers, they're used to having discount retailers, and now they'll have another one from across the shores. So yes, a great day for Associated British Foods, but not so much for their flagship brand, Primark, but they do expect it to pick up in the coming months.
Thanks a great deal, Juliana. Enjoy the rest of the day.
Thanks, Jimmy.
And shares in Asia Pacific were mixed. Today, trading following overnight gains on Wall Street that took the major indices to record closing highs. Shares of Japanese conglomerate SoftBank Group soared 10.24% after the firm announced a plan to buy back up to 1 trillion yen of its own shares. Japan's broader Nikkei 225 dipped 0.66%, while the Topix index traded 0.65% lower. Mainland Chinese stocks were mixed, with the Shanghai Composite slipping fractionally, while the Shenzhen Component hovered above the flat line. Hong Kong's Hang Seng Index declined around 0.1%. And in the U.S., stock futures were slightly lower during early morning trading after the major averages closed at records boosted by strength in infrastructure stocks. Futures contracts tied to the Dow Jones Industrial Average dipped 10 points. S&P 500 and Nasdaq 100 futures traded in mildly positive territory. During Monday regular trading, all three major averages rose to new highs. Key inflation data will be reported this week, with the Producer Price Index reading coming on today, followed by the Consumer Price Index on Wednesday. And global oil market prices rose for a third session in early trade today as the passage of a U.S. infrastructure bill, Chinese exports, and the global post-pandemic recovery lifted the outlook for fuel demand. Brent crude was up 8 cents at $83.51 a barrel after gaining 0.8% on Monday. U.S. oil was up 10 cents at $82.03, also after a 0.8% gain the previous day. U.S. President Joe Biden's long-delayed $1 trillion infrastructure bill, which passed through Congress at the weekend, and better-than-expected Chinese exports helped paint a picture of a more expansive global economy. Despite the tighter market, U.S. crude inventories are expected to have risen a third straight week, possibly helping to cap further gains. And after the break, there will be more on commodities market. Just stay with us. Semiconductor chips are critical inputs in the global manufacturing industry. The global shortage in these chips has slowed down economic growth and increased costs in advanced economies. Based on research by Bloomberg, chip supply shortage has resulted in a 26.4% increase in the price of cars, from $34,800 at the start of the pandemic to $44,000. What will this mean for cars in Nigeria? Lawrence Messi, one of the research analysts with financial derivatives company, will tell us. Hello, Lawrence. Good afternoon. Good to have you on the show.
Good afternoon. Thank you.
So chip supply shortage has resulted in a 26.4% increase in the price of cars. What impact do you expect this to have on the cost of cars in Nigeria and other transient effects, such as transportation costs and inflation?
I'd like to start with the fact that earlier this year in January, the Finance Act was implemented, and this saw a reduction in import duties of cars from 30% to 5%, and also a reduction in the import duty of mass transit vehicles carrying more than 10 people from 35% to 10%. Now, you'd expect that the prices of cars would decline in Nigeria, as this would be a positive note. But in June, however, terminal charges were increased by 50%. Because of a lot of other factors owing to things like maybe the exchange rate and unfriendly port conditions in the country. So this increase in price due to global chip shortage would largely add to the cost of cars in Nigeria, coupled with the increase in terminal charges as well as port clearing fees. And we can expect that it will also have an inflationary impact because there is a large dependence on used cars in Nigeria, which is also transient on the fact that there is increased cab hailing services such as Bolt and Uber, as well as logistics, which makes use of motorcycles as well, which are also affected by this global chip shortage. So all of these would see an increase in the price of cab hailing, increase in the price of logistics, which will trickle down into the increase in price of finished goods that are delivered to customers and a general inflation climate and increased transportation costs.
And there's been an increase in global sales of used cars, just as you did mention, largely attributable to the slowdown in production of new cars. In a report by Forbes, global chip production is not expected to stabilize till 2023. Can you give us more insight into the root cause of this global chip shortage and the next steps?
As with most of the negative trends that we've seen this year, because of this global chip shortage is not far-fetched from effects of the COVID-19 pandemic. So what occurred was during the restrictions and lockdowns, there were fewer driving activities. People were not moving around as much as they would. And this led car manufacturers to halt some of their orders for chips, which they would use in the manufacturing of these cars. And then obviously chip manufacturers, in an attempt to remodel their business, now decided to serve other industries which require the chips, such as laptops and home appliances, because of the increase in remote learning and remote work. And then at the onset of lockdowns and the ease of restrictions, we see that these car manufacturers are at the back of the line, and the chip manufacturers cannot meet demand at this point. So capacity is well below what's actually demanded, coupled with some other adverse effects happening in the world. There's an ice storm in Texas that's also caused a shutdown in some of the chip manufacturing plants, as well as a drought in Taiwan, which has also caused one of the largest chip manufacturing plants to also slow down in its production, as well as the Delta variant in Asia, which is also restricting production of chips. So all these factors can be attributable to, can be the main leading factors of why there's a global chip shortage.
Now, there is increased activity in the Nigerian auto industry with rising investment in car assembly, as well as the rise of locally produced cars such as innocent vehicles. Considering the structural imbalance in the global auto industry, what can be done to lower the cost of cars and transportation costs in Nigeria?
Thank you for that. Well, I think it's important to actually state what's actually causing this the increased cost of cars in Nigeria. Mainly, well, we have increased freight charges as one of them. We have security charges, and we also have increased insurance charges by cargoes that are bound to Nigeria. And then you also have the exchange rate factor as well. So all these factors are accountable or attributable to why there is an increased cost of cars. And I'd also like to just talk a bit on the freight. The freight is also because of the fact that there's no export going back. So most of these ships are not going back with containers, they're going back empty. So people that are importing items will have to pay double the freight to cover for that export unavailability. So what can be done simply is to promote indigenous freighting services. That's Nigerian-owned freighting services. This could largely reduce the cost because right now importers are at the mercy of foreign shipping companies. Second would be increased investment in security along the waterways. And thirdly would also be increase in quality and also implementation of global best practices based on international maritime standards along ports and along terminals as well. So all of these factors would greatly help to reduce security and clearance charges at the port, and also a revamping of the port processes. That's seamless practices that will also discourage illegal payments being made at the ports, which will also make it easier to clear goods. And as for the exchange rate, well, that's for monetary authorities to handle. But I believe that steps in these directions would largely contribute to reduce the cost of cars in Nigeria. And
thank you very much.
As well.
Thank you, Lawrence. We do appreciate your time on the program today.
Thank you for having me.
And Ghana's oil production is set to decline in 2022 as a result of coronavirus-related restrictions, which deferred work programs and other activities in 2020. The head of production at the country's state-owned oil company says the West African nation's crude oil output will drop to about 146,500 barrels per day next year, from 150,000 barrels per day currently, after COVID-19 restrictions slowed development activities. According to him, drilling and completion of wells will be expanded to 5 or 6 wells next year from 4 this year, helping production to rebound back to 2020 levels in 2023. Ghana is seeing growing interest from international oil companies to participate in its emerging oil and gas industries, including Italy's Eni. In October, Africa-focused explorer Cosmos Energy bought part of fields sold by Occidental. And the Republic of Niger has become the latest country to join the Africa Finance Corporation as its 33rd member state, which takes its membership of African countries up to 60%. The membership of Niger is a significant milestone as it completes the membership of all countries in West Africa. Niger is one of the world's most vulnerable countries to climate change because of its exposure to climate risks and its landlocked position. The partnership will support Niger to build the long-term resilience of its industrial and pastoral systems. With a mission of bridging Africa's infrastructure gap, AFC has invested over $8.7 billion in 35 countries across Africa, utilizing its unique access to global capital markets to drive development, integrate the continent's economies, and transform lives. East Africa countries have been urged to adopt the 36% maximum tariff rate to drive the region's industrial development. According to East African Business Council, this will attract investments in industrial value chains and transform the bloc into an export-led economy. EABC argues that the 10% differential is needed to safeguard and retain existing investments that operate the regional value chain, as well as attract new investments to transform EAC industrial sector by turning secondary intermediates into finished products. The proposed rate will promote the consumption of locally manufactured goods and strengthen the regional value chain. Most of the products that have been considered to be assigned a maximum rate are under the EAC priority value chain as provided for in the EAC Industrialization Policy 2012 to 2032. Some of these products include textiles, iron and steel, and motor vehicles. And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwago.